I'm honored to welcome Mr. Thierry Chilosi, Chief Strategy Officer and member of the Global Executive Committee at SWIFT, to present their view of how data in ISO 20022 play a pivotal role in transforming the future of finance.
Good morning, everyone. Yeah, it looks like I'm taller. It's really a pleasure to be amongst all of you today. It's standing room only. I think see people in the back, and I think, Andrew, we're going to get a life. I'm going to try to be one of the geeks as well today. So like I said, I'm coming from Belgium. It's an honor to be here. It's my first time in Israel. And I can already tell you that from last night, the warm welcome that I received, the collaboration that I understand that is taking place in this community, is very much in line with what I'm going to talk about today. There are three themes that I really want to touch on, and I hope that I can bring you some insight. I'm going to talk to you about data, of course, but I'm going to try to do this giving you a perspective of what we see from SWIFT on the global landscape. So I'll talk about the trends. That's the first thing I want to do. The second thing is I'll try to get a bit geeky and talk about the advantages, the benefits of using real data. And then I will conclude with what we believe is necessary to succeed, right? And because that's quite important. So let me see how I operate this. Yes. So COP27 is taking place not too far away from here. So we thought about bringing an image that tries to exemplify what we believe is happening in the ecosystem right now. Now, if you asked me to come 3 years ago, I would say the same thing. It's unprecedented change. And 3 years back, it was unprecedented change. So what do we really see happening in the landscape? I will pinpoint what I think are the three biggest trends that we see in the ecosystem. The first one, it come across what we saw happen post-pandemic, and nobody will argue again. You see the digitalization speed. The speed at which things are digitizing is way faster than it used to be before. Some of us used to be working in some conditions, and we're forced to work remotely, and it's incredible how we have adapted to this. That's a very big factor, and this trend is going to continue, even accelerate on many segments, not just payments, because we're talking also about trying to digitize trade, for example, which is very much a paperless process. So in general, finance, what we're going to see is really a push to digitalization that is not to the same speed that it used to be before. So we believe that trend is really, really going to accelerate. The second thing comes from this difficult headwinds that we have at the macroeconomic context. We are not going to talk about inflation rates, but the industry, the world is struggling. The world is struggling with very big changes. We have wars in some places of the world. We have energy crisis. We have too much liquidity in the market. And the central bankers, I can tell, are very busy and try to do the best jobs that they can to keep an orderly manner of operating in this context. This is affecting people's lives, right? This is not just for our industry. It's really going to change the way that people are going to be living. And I'm going to make a parallel. I'm going to dare to make a parallel. You know, we're talking about energy transition. I mean, we are also talking about transitioning our infrastructures in financial services. It is not going to be easy, just like an energy transition is not easy. If you're used to operate with certain infrastructure and you think those same infrastructures are going to be the same tomorrow, that's going to be a trouble. We can take some lessons from some of the fintechs right now that are using technology. You know what they do? And some of the best in class, they are developing one system. Their engineering teams is already constantly replicating the system on the new technologies. Because a big problem is when you have big bang migration. It's extremely costly. So we need to think about the fact that we are in a transition moment also in our infrastructures. And this transition is bringing challenges, but it's also bringing opportunities. And it's on the opportunity that I want to focus, not just the opportunity from a single country perspective, from just a SWIFT perspective, but really globally. What do we need as the next infrastructure is going to support our businesses for the next 30 years? That's how we need to think about. And at SWIFT, we are a cooperative, so we're going to do this collectively. I want to say that there's a call for action to collectively work, because you will have read a lot of technology innovation. You will read about artificial intelligence, instant payments, you will read CBDCs, you will read about Web 3.0. There is so many promises that all these technologies bring, but we have a challenge. We have a very, very big challenge, and I will just pick one, and it's called fragmentation. Right? And everything I want to talk about today is how do we team up, because it's going to hit you in many different ways. You're going to ask, where's the business case? You're going to ask, where do I want to bet? You're going to say, well, why don't I stay with what I need to do? Because when we see everything that the team has done in these slides, this is massive work. And there is one way to go about it, is really, and this is what the theme of today, what we've decided to do at Swift, let's start with the basics and the foundation. We need to make sure all of us speak the same language, and that's why data is so important. So when I spoke to Oded and his team, this is why we selected data to be what we want to talk about today. Because the common unifying factor for the infrastructures we're going to lay down is going to be to have a common language, to understand each other, not take shortcuts, because that's the only way we're going to deal with the fragmentation challenge. That's the only way your investments are going to be able to take you further, not just on your RTGS domestically, not just on your instant payment system domestically, but doing it cross-border, being able to, and many people talk about embedded finance. Well, forget it. If you don't have a common way to provide a payment embedded into any other transaction that your end customer ends up wanting to do, you need a common way to speak about that. So fragmentation is, for me, what we all need to collaborate to work so that we diminish it. I'm not going to claim that we can make it disappear, right? We need a bit of fragmentation, let's be clear, because when you need innovation, you need new things to happen. But you need to do it in a smart way. You need to innovate in ways that are not going to ask you to reinvent continuously, reinvest continuously in the same things, right? So where are we today? And I should probably move to data. So the second thing I want to talk about is the importance of moving to common data. What you want to see here today is why is Swift actually talking about migrating cross-border payments to ISO 20022. The first one is when you look at a map like this, you see many countries that are migrating their RTGS systems to ISO 20022. And when you talk about global trade, I was exchanging with a few, what we see in mature economies, about 30% of payments that are cleared via an RTGS system, like the one that you're modernizing, actually have a leg that starts cross-border, right? Because that's the way that global trade is facilitated. You serve your corporate customers, they end up wanting to pay their suppliers from other parts of the world, and these needs to reach those banks that actually are banking the suppliers. They do this for the vast majority via RTGS systems, but this is going to change. We saw on the slides of Oded before, instant payment systems. We see wallet systems. So increasingly, you have to be ready for transaction cross-border to flow through these different ecosystems. But the RTGS systems are migrating. When you do your calculation, all the next generation instant payment systems, they're based on ISO 20022. Even those CBDC experiments, by the way, when they interlink, they use ISO 20022. Our computation says that by 2025, 85% of the value exchanged cross-border will have originated from 20022. So there is no choice but upgrade the cross-border. Because if not, how do you ensure that a transaction that originates in rich data can actually make it all the way to the destination country without data truncation? Yes, you can make it happen, but you will have data truncation. And that is one area where, for compliance reasons, we cannot afford it. Increasingly, so you're going to need to pass the data end-to-end, not just for compliance reasons, because also your end customers is expecting an experience where they know exactly when the payment arrived, they know by when the payments will get there, and they know, importantly, how much the payments will cost. So if you need to channel all that information all the way back to a chain, you need the place to fit the data in it. But rich data is not only a back-end need. Andrew spoke about Twitter that had a very limited set of characters. But all of you know that on the back of this very small text, Twitter knows at what time you sent it, from which browser you sent it, what websites did you navigate through before you hit it. All this metadata, all this magic is happening on the back. And this is also how you should view ISO 20022. For sure, it's not going to be appealing to the customer if you take all the fields of ISO 20022 and ask your customer to fill them. That is not the way to go. What is happening in the front end is a revolution on data. And the front end is where you should look for your business case. The back end is where you're going to look for the cost savings. The front end is where you're going to look to better serve your customer. And you're going to better serve your customer because you're going to simplify the few fields that they need in order to do a domestic payments and a cross-border payments. And the other way, you have to sit and imagine how this is going to work. It's already happening today. As I fill in that screen, you know, this application knows where I'm trying to send the money. This application is going to ask me for the beneficiary. It's going to be able to validate that that beneficiary's account exists, that it can receive money in any currencies that you wish, that that account was not subject to fraud. And this is all happening before you hit the send button, right? And those exchanges are all done on structured data. And you're going to fill in the very few fields that you need to make the transaction happen. But the magic is happening in your application. It's happening in the applications that are feeding the payments, because in the back, what is the most efficient way to process the payment, whether it goes to an RTGS system, an instant payment system, a CBDC, is that you get all the right fields that this transaction can again navigate through and complete. And most importantly, that front end knows when the payment arrived, and it knows how much it cost. That's what we're working for. Now, the question is, when will all of that happen, right? We can all claim, but this is how it's going to happen, right? And the customer is not going to care whether it has a bank account. It's not going to care whether it has a wallet. It's not going to care if it's holding CBDCs or not, because, by the way, that exchange for the customer needs to be transparent. That's why they asked me to work on strategy at Swift, because I try to take a bit, but let's be a bit more geeky now. Apologies for going to that. What exactly is on the value of getting rich data? I mean, the first one is pretty basic. What ISO brings on top of the existing system is structure. You all agree that if I send a payment, I need to know what's the name of the beneficiary, and I need to know the exact address. Of simple reasons, if I do compliance checks, I'm going to base it also on lists where I have names, where I have individuals, and I want to make sure this payment is not stopped for the wrong reasons. So today, in the current structure or in card structures, you can do that, obviously, but you cannot tell what is a name versus what is an address. So if I have a shop that is called a Havana Cafe, I'm not really sure whether that's going to be an entity that is based in Cuba or just the name of a shop. But with structured data, I know this. Now I have two choices. I could apply tons of artificial intelligence and try to detect whether that was a name or an address, or we could be smarter about it and structure data from the source. And then we use artificial intelligence to do where it's going to bring us the real power, like in fraud prevention, in trends, and not to do such basic tasks that are happening today. And by the way, I need to make sure that my shipment arrives to the right address. So getting the data right is not just right for the payments, because who wakes up in the morning and says, I want to make a payment? None of us. We want to make a transaction. We want to make something different. And this is where joining forces to make sure the data is clean is super important. The second thing is I have more space to put important elements, right? End-to-end identification allow me to track payments all the way through. I can understand the currencies and deal with all the effects, because you will need to have a sustainable business model. So how do you make money? Either on transaction fees, on FX, because you still are taking a risk. You're doing a valuable job in the market. You're providing liquidity. And whoever is doing a valuable job needs to be rewarded and needs to have an economics that works. But that economics should not be based on inefficiencies. It should be based on the value adds that you do for your end customers. So Having those elements are clear, charges, everybody can take their charge, but transparently you can relay it back to the end customer. Now I'm going to tell you why it's important a bit later on. Enhanced data models, so this is all about making sure things are clean. I'm not going to bore you with a lot of it. The last one is quite important, new elements that you get on ISO field. New elements are super important. You may not realize it right now, but the world of tomorrow is going to world that's going to have multi-models, you know, what we call the payment type. When I started my career in payments, you know, check people, you work on checks, cards people works on card, you have credit transfer people that work in credit transfers. And RTGS was a different pay type, and none of these things touched. Now you all realize that the world has changed a lot. These are going to start to be interchangeable, including wallets, including CDBCs. So we cannot keep on inventing new standards for everything we do. So the new elements allow you to accommodate many models, whether you're going to settle on a correspondent banking chain, whether your payment is going to go through a faster payment system. Why should we have different data sets for that? We will have the same common data set that will allow us to do all. This is why, together with the team in your community, we're very keen to collaborate on making sure that your retail payment system, your TGS, uses the standards the right way. Yes, because you can find very efficient ways to make them used domestically, but you want to be borderless, right? Because one thing for sure in the future, we will see, because when people ask me to predict the future, I say there's one certainty I have is there will be more transactions. The same way you see micropayment explode, you will see micro-lending, you will see, with the data that we have, you're going to see more transaction. So it's about how do we get more efficient in processing so that we can go capture these transactions as they emerge. The client experience is going to hugely benefit from this, and this should be the big winner for us, right? So where does it, interoperability, as I just said, between different ecosystems, better compliance, because now you can base your compliance on the true data. You know, statistically, over the world compliance, about 2% of payments are stopped because of compliance reason. Out of these 2% that are stopped, probably something like, they claim 98 to 99% are false positives. And one stop payment is a very big dissatisfier for the customer, especially if they're expecting to trade. And it costs a lot of money to the players in the industry. So the cost saving is going to be in that area. Really, let's try to remove the friction on that. And there's a number of things that you're doing that are in the right direction. So your initiative domestically to try to confirm that a payer is actually reachable through that specific bank account number is very precious. Because if you do that up front before sending the payment, you say, well, first of all, you have a happier customer because they actually know that the person they're paying is the right one, which when you go to an instant payment system is super important because you don't want those systems to be abused for fraud. It's easy to give a wrong account number. This is a very used use case by fraudsters. Is they allow to give you a different account number, everything else in the invoice is the same, and they collect the money. But now this gives you the capability for the end customer to check whether the person that they're paying is really who they intend. In Europe right now, the regulators are putting forward a legislation for consultation where they will make instant payments mandatory to every bank, and they'll make confirmation of payment mandatory for every bank to implement, so that an individual or a corporate sending a payment can know for sure where that money is actually going. And the reason for that is really to try to prevent fraud. Richer customer experience, so I showed you the screens before, it's not about complex. On the contrary, we deal with the back end. Our CEO used to have an analogy. We are like, imagine you have a rock concert, right? And there's a show there. And there's somebody taking care of all the wires and all the lights on the back. And if you look under the hood, it's a total mess, right? But somebody has to do that job, right? So that you run the show, right? You run the show in front, and the customer experience is where you run the show. So that is quite important that we get that right. And of course, drive down costs with efficiency. What's the vision? The vision that we've worked together with the SWIFT community is one whereby we believe transactions should be instant and frictionless in cross-border. We take a lot of inspiration from what you do domestically. Right? I think, Odette, you said that. I mean, you would like to have the same experience that you have sending a payment in the domestic market. You would want to have the same when you send a payment cross-border. Now, that is easier said than done, all right, because there are the level of difficulty of challenges. Well, first of all, you have FX issues, you have liquidity issues, you have compliance issues. But we know how to deal with those, right? And we already have systems that are very safe, that are regulated to deal with these things. And so at SWIFT, we connect, we estimate about 4 billion accounts worldwide, right? So right now, you can make any payments to 4 billion accounts anywhere in the world. And that is a precious asset of our community. And we can only do that because you connect directly to SWIFT. So we've changed the strategy that we used to have. You used to know us as a messaging provider. So we took messages from A to B, secure, reliably, resiliency, and that has been what we've been doing and will continue to do for some time. We've moved our thinking to say, okay, how do we make these transactions, whether they're payments, whether they're trade finance transactions, they're securities clearing, they are the transactions that allow you to collect instruction from the corporates. How do we make them instant and frictionless? And the first foundation that we built was data. We said, if we want to get faster and more costly, we have no way around it but make sure that the data and the underlying data is clean and can be operated in an instant. And I've explained why we've moved it. It's not like we woke up and we say we're going to do ISO because that's what the world needs. The major currencies are moving to ISO. There is no choice. So that boat has already left. Right? It's left. We cannot go back because as the major clearing currencies move to this rich data, anything is going to follow on that front. So let me illustrate how difficult it actually can be to be instant and frictionless by showing you a picture. This is illustrative, right? You will see a chain of banks that are processing a transaction cross-border. Usually the transaction is initiated by a customer somehow. It hits either a PSPs or a financial institution. It is usually processed in one country or one jurisdiction. And then it needs to cross over that little bar there, cross the borders and to go to another jurisdiction. And you have important roles to play that the intermediaries play. The intermediary banks that hold liquidity, this is the biggest asset of the economy. They are key to make sure that transactions flow in between. Now, those could be done by PSPs that hold account in several jurisdictions or banks that hold account in several jurisdictions. We see a future whereby those ecosystems are going to hit RTGS, ACH, instant payment systems, that's what IPS is for, CBDCs, tokenized ecosystem, digital currencies, digital wallets, right? And the way either you build a different system along the chain for each, or you try to be smart about it and you say, okay, how do I make sure that we are interoperable? And on the top, it's a linear chain. On the bottom is some of the experiments that are happening, where, for example, a lot of market infrastructures are experimenting. How do they interlink? So, for example, the Bank of Israel recently launched an experiment where they interlinked with, I believe, Sweden, Norway, to issue CBDCs cross-border. These are schemes that can work as well, right? They can interconnect directly the liquidity between the two countries. But regardless of the model, you're going to need to adapt to all of those. You're going to need to adapt, and this is where fragmentation is a bit the challenge and the issue to tackle together. And we can tackle it, you can clearly see, by at least having a common data layer. Okay? At SWIFT, we're working very hard to try to reuse whatever we have, because we don't want to be throwing away all the investments that are made. And we also have a mission to be inclusive, because if not, what is going to happen is only the institution with enough scale can afford the investment of being present in all those different chains. But it is a mission for us together to make sure that you keep reaching the 4 billion accounts. Right? And we can do this together by working on the standard, the same way we're doing it together, working with the different ACH and retail payment systems, because if you are purely a domestic player, you can reuse your existing domestic clearinghouse with the existing data, because tomorrow cross-border payment transactions are going to flow through these systems. They are already flowing through these systems by entities that are doing 2 domestic payments on each side of the legs. Right? So our strategy, I'm not going to go into a sales pitch of SWIFT. That's not the intent, but I want to say that the strategy that we have is one that is very much anchored into making payments better. And I have some good news to share. There's some really, really good statistics that members, institutions like yours have done. Right now, I don't know many people know that, but 47% of SWIFT payments are credited to beneficiary within 5 minutes. Right? And something like 59% in 30 minutes. And this is something, it's hard to say whether it actually happened or because today we can track them and we know about it. Right? And we still have challenges to do. The CPMI, the BIS, the G20 have an agenda to improve cross-border payments, which is anchored on 4 key metrics that they want to measure. Because some people say, why are we doing that? I mean, there's the customer demand, there's a lot of scrutiny from regulators to try to improve cross-border payment space as well. And the 4 targets they put are 1 on speed, where they would like cross-border payments to be credited, 75% of cross-border payments to be credited within 1 hour. That is the target that they have set. Right? So we are not too far away from that. We can still remove some friction and accelerate that. The second target is on cost. They're like a benchmark that no more than 3% when you talk about retail transactions. So they separate wholesale, corporate banking transaction from retail. On the retail side, this is where we have an issue on cost. And as an industry, we could be a lot better if we join forces. So on lower value payments, the target is 3% maximum cost for a payment. Right? How do we achieve this? It's super important we go after that. First of all, because retail, lower value transaction, this is where the growth is. Right? We are growing at SWIFT about 2-3% on wholesale. These are numbers of growth rates of about 20% in some sub-segments like marketplaces and e-commerce transactions. So payments is a scale business. Right? If you want to be efficient and you want to have if you will, the return on investment, you need to gain volumes. And you have currently good volumes, probably as banks traditionally on corporates, SME segments. Other players have taken, I have to say, and are taking higher shares when it comes to lower value payments. But it's a scale business, and if you don't have enough scale, you cannot pay for all the compliance costs and all the technology costs. So you need to tap into the trend that is a growing trend of more and more micropayments cross-border. Yeah. Even in a challenging geopolitical context, we do believe the world would still need to work together and get payments. So super critical. Number 2, I said, lower value transactions are key. There is a target to be more efficient at it. As an industry, we need to make, I say, the $100 payment profitable for the banks and give to the end customer a super competitive experience like the one you've seen on the screen. That is fundamental. The third target is even more, I think, challenging when you look at the cross-border, is transparency. Before a customer sends a payment, G20 is pretty strict about that. By 2027, the end customer must have full visibility on the timing and the cost of that payment. That includes the FX rate, that includes the full charges that not only you as an institution is going to take, but what your intermediary is going to take and what the end beneficiary bank is going to take. And the fourth target is about accessibility, making sure everybody has access to those systems and have more options. And I think there's a lot of things happening in your jurisdictions to promote accessibility to payment systems. And a partnership play between the banks, the fintechs, is super critical to make sure that you can actually make payments a mean that is available to any individual, any corporates, any segment that you choose to serve. What we are doing about SWIFT about that, we're working together with you on speed. We've launched GPI, we've increased speed on wholesale payments. We've launched an initiative called SWIFT Go, which is the same thing that GPI did, but for low-value payments, making them predictable, fast, know all the fees up front, reusing the same data, the same processes that you're already doing for your RTGS system domestically, for SWIFT cross-border. This is where the benefit is. Let's reuse what we have, because account to account can be brilliant. I have a saying, I'd love at SWIFT if I could come with a strategy that makes the bank account the best digital wallet. That's the aspiration. That a customer that has a bank account can feel that he can do anything that he can do with an Apple Pay or with anything else, with a CBD. Who cares? That's the primary savings mechanism. That's the primary means with which you serve them with loans, right? And all this investment about pre-validation, confirmation of payee, making sure that you have transparency is all about that front-end game that you play, is you make the bank account the best digital wallet. So we're working on offering services like GPI, SwiftGo to give the customer promise of a fast, secure payment that is predictable and transparent. Then we're working on the back end to reduce the cost of processing a payment with ISO 20022, pre-validation. Today you can pre-validate a transaction in SWIFT. The way we do that is we collect statistics on accounts. We know what accounts have received a payment via SWIFT already, that payment was credited, and that account was not subject to fraud, for example. And you can do an API call to the SWIFT pre-validation service and you'll get that information, right? In addition, we look forward to partner with domestic initiatives that are launching pre-validation service domestically so we can further enrich the experience. And you don't have to develop anything different whether you are pre-validating a payment for domestic reason or you're doing it for cross-border use cases. You can leverage the same technology and the same investment. And of course, we need to do this trusted, reliable, and secure. And the place where we're putting a lot of effort right now is this interoperability box there. We want to make sure that whatever is flowing through the network from a cross-border and a domestic can seamlessly interconnect. Okay? I said I was going to conclude by saying, that these challenges of fragmentation, there is this opportunity provided by data that is not an easy one to grasp, but we can only achieve this together by collaborating between what is happening on the domestic field, what is happening on the cross-border field, what is happening between high-value payment systems. It's a huge benefit that you have that your RTGS will be ISO capable, your ACH ISO capable, your instant payment system ISO capable. The fact that you do a pre-validation call is based on ISO. It provides a bit more simplicity. I'm not going to be unrealistic because there's still a lot of work in the back end. To make the rock concert happen, you still need a lot of wires in the back. And those wires cost, and they cost to maintain. And this is why you need to bring more volumes in it. Because the only way you're going to get it is get more volumes and be more competitive. The good news about that is there's not going to be a lack of transactions globally. Transactions are still growing. When you look at the amount of fintech investment that is being thrown, it's not just because they're looking at the static figure of today, it's because of the projected growth of the market in the years to come. We've seen pandemics, our system has been resilient. Transactions have kept flowing. We have to be proud of the work that the world has done in that space to be secure, reliable, and keep channeling transactions. We are seeing difficult times ahead. Transaction will still need to keep flowing, right? There might be a flight to quality, but there is also the need to keep on exchanging, to keep better. Let's see how we serve the energy transition challenge together. The financial industry has a role to play. And we can play it if we are as efficient as other industries as well. So it's for us, we hope that we do the job that you want us to do, to focus on standardization, to provide you the bridge, like it's seen there, to interconnect. That is our ambition. And our ambition is to stay a bit ahead of the game together with you because, yes, we want to keep running everything, and the less people talk about SWIFT, the better it is for us. It's been a difficult year because of sanctions. A lot of people talked about us. But our job is to be on the back end, to keep things running so that your country and your institution can focus on bringing innovation in the front end. And that's my parting closing remarks. I'm more than happy. I see the clock is ticking, but I might have a minute or two. If not now, in the breaks, happy to answer any question you may have. And again, a big thank you for having invited us here in Israel. It's a pleasure to be with you.
Thank you, Mr. Chilosi, for the enlightening and interesting presentation.